Let's get in the market voice. Chakri, Lokapriya, Managing Director at TCG Asset Management, joins us right now on the show. Chakri, good having you. Thanks so much for joining in. Must say it's better having you in the studios, but we'll make do with this appearance today as well. How are you approaching the investing climate currently, Chakri? If you have money coming in from your investors, are you getting tempted to deploy it at these valuations in select pockets, or are you still biding your time because of the uncertainty, not just on the local front, but on the global front, rearing its head again with crude doing what it is doing?
Good morning. Thanks for having me, and sorry that I couldn't be in your studios today. But nevertheless, today, the way we're approaching the markets is, we are staying by the sidelines because we expect that, the tightness in the NBFCs and the tightness in the credit system. Yes, RBI has come out with a 100 billion OMO, announced a 100 billion OMO. That will release some amount of liquidity into the system. But we think another round of OMO is necessary for the liquidity to credit to flow back into the system, or rather the cost of credit to come down a little bit. Mind you, we are heading into the end of this year, which has elections, which has festive seasons, usually periods associated with high credit demand. So on top of that, you have a tightness, so that would lead to a even higher cost of credit. So against this backdrop, we are, keeping some powder dry to wait for the market to settle.
What do you see as the biggest drawback of crude oil reaching $80 per barrel, the Brent crude?
I think one of the biggest things is clearly our the deficits of India will continue to widen, and that is likely to continue to put pressure on the rupee, which has a circular story which leads to inflation, and that might lead RBI to again raise interest rates for all the wrong reasons. So, and which would again slow down growth. So, to get off this kind of a circular reasoning will take time for the market to reset itself.
Currency looks like it's once again approaching those lows. The opening was pretty weak, around 72.91. Its all-time low, I think, is about 72.97. A breach of 73, what kind of a negative sentiment does this throw out in terms of foreign investors as well as jitters within the domestic market?
In terms of foreign investors, this is a redux of what has happened in 2013 when the currency slid about 15%. And year to date, 2018, the currency is again slid about close to 13-14%. So an FII investor hasn't seen gains because of the currency losses. And so against this backdrop, investors FII investors, I think, will stay by the sidelines until some stability in the rupee's fall emerges. And so I think you will see some kind of slowdown in FII flows until the currency settles down.
Interesting. Chakri, some of these usual suspects and the way they've come off, now some with reason, in fact, well, you argue all with reason because all of them had a very high multiple, whether price to book or price to earning. In the case of the HULs of the world, the P multiples were high. In the case of all the NBFCs, the price to book levels were high. Asset management companies too, the AUM to market cap very high. Is there some cushion that a buyer has, or should people not be brave hearts right now because we don't know the extent of the pressures that might come in, be it on the cost of funding, be it because of external factors like crude and the economic factors deteriorating and therefore prompting RBI to do more? What would you be doing here?
There are two types of sectors, clearly, if you can try to categorize them like that way, which is in one of the export-related sectors, which will all do fine. IT will continue to do well. Pharmaceutical companies, pharmaceutical will do well. Metals will continue to do well. And in general, all those chemical companies, etc., which are more export-related, will continue to do well as long as they have low levels of debt. And fortunately, if you look at each one of these sectors, they hardly have any debt on their books. And so cost of funding does not impact them. And the demand, on the other hand, the export demand continues to remain strong. So I would, the way we are approaching is to focus on those sectors and stay away slightly from the domestic sectors. At the same time, the staples, again, you take the Hindustan Levers of the world, it does not have any debt. It's a cash-rich company, a super high ROE company. So that will provide a backstop to its valuations.
What are you doing with financials, Chakri?
Financials, well, now it's become a tale of three parts. One is you have the PSUs, loan growth has come off because of lack of capital. Now, second is, because of the mergers, the recently announced Bob merger, and the expectations that another round of mergers may happen, that will provide a lid on the good performing banks, because now you're making the good banks acquire the weaker banks, so people will stay away from buying the good banks in the PSU space. Second, NBFCs, wherever you have an asset liability mismatch, those banks have corrected quite significantly, so I don't think there's much of a fall left in NBFCs. Then the private banks. In the private banks, you have, on one hand, the valuations are not that demanding if you look at an ICICI or an Axis, and maybe an HDFC bank has also corrected in the last few days. So I think that's where you will continue to see some flows.
Chakri, what about a Yes Bank? Not really a buy or a sell call here, but do you think the market would shy away from Yes Bank until the release of the first quarter numbers of the next calendar? Because if indeed we go down the path of Rana Kapoor moving out and a new MD coming in, we don't quite know what the new MD and CEO will want to do with the way the disclosures at Yes Bank have been and the kind of disclosures that come out in the April to June quarter. A lot of people are likening this to what happened to some of the PSUs, wherein the new management comes in and writes off a bunch of skeletons that the old management has left behind. Do you subscribe to this theory, or is the pullback in valuations for Yes Bank enticing enough for somebody to go out and put in money?
No, Yes Bank at the end of the day is today an institution, a well-established franchise, and will do well under whoever is the new MD. But meanwhile, it's rather unfortunate that RBI acted the way it did in giving a very short time frame to find a replacement. So meanwhile, until the new MD is appointed, one of the biggest drivers of Yes Bank's valuation has been its strong loan growth rate of 20-25% plus. Now that is likely to come down. So what will be the new loan growth rate over the next couple of years is going to be the question, and therefore that will determine the valuation. So what worked in the last 10 years for Yes Bank is unlikely to work in the future. And the valuations, yes, are reasonable, but I think the stock is pretty much going to tread water until the new MD or clarity on the new MD is there in the market.
Just look at what's happening, by the way, on the markets. 10 minutes into market open, Diwan Housing is down about 4.5%. Indiabulls Housing corrects another 4.5%. Grove Finance, by the way, has come off quite rapidly, 307 now. So NBFC is still bearing the brunt of selling pressure. The only pocket that seems to be doing reasonably okay is IT, because Zensa Tech, Sonata and some of the others are moving up in trade today. Chakri, my final question, a quick thought here on mid-cap IT. Is there a pocket that you would bet on?
Mid-cap IT, absolutely yes. I think the valuations are fine. More importantly, the demand is even stronger. And against a backdrop of weakness in other sections of the market, mid-cap IT will do well.
What about the larger names? I mean, yesterday you had the likes of TCS, Infi, all of them have gains closer to about 2.5 to 3.5% apiece. TCS, in fact, at its life high now.
Indeed, and you will see some amount of currency benefit which will trickle down to their bottom line. So, and therefore, I think so. Therefore, the sector will continue to do well. And also, given that you'll have a higher allocation by funds into the IT sector.
Okay, Chakri, we'll leave it on that note. Thank you so much for taking the time out and being with us today. Really appreciate your time and your thoughts on the platform.
Thank you so much for having me.